Hey guys, today's Friday, quick trade breakdown. Yeah, actually, quite interesting trading day today, once again. I think I always say that, but yeah, I'm learning everything. No, always something new, every single day, I would say. And yeah, that's today's business. As you know, we are trading at all-time highs, what we can see right here, and yeah, really expanded higher over the last days, I would say. So yeah, really still in trading conditions. But what you can see right here is we have also a new day opening gap right here. We did not trade it into that. It's really bullish in that case. Also barely traded below the midnight opening price, and from there on really expanded higher overnight basically. Already, yeah, right here also in the new open kill zone window. And from there really retraced only lower within the pre-market. We scrapped new open kill zone says liquidity. Then we really had high resistance in here because we did not want it to trade lower, but also we're not able to really trade higher. And now we are once again trading higher. I think it's a bit difficult to say because I was in a long right here, added right here, first contract off right here, booked a partial right here and closed now right here. Because I do not really like the delivery so much. But I could also see the possibility that we will eventually even reach towards the new open kill zone by liquidity back to all-time highs. But yeah, really high resistance today. And therefore I'm content with just closing my position, being done for the day. Also, I do not really have to be constantly looking at the charts. I don't know. So first, maybe let's also take a look on the hourly chart right here. What you can see, yeah, nothing really special with the hourly gap right here, small one right here. Yeah, basically retraced back into it and from there on traded higher. But just what we had today was high resistance that was a bit difficult to manage. Also combined with the new open kill zone. No, sorry, with our new opening range gap. That's how it's called. And yeah, so I think we can now also take a look on regular trading hours. So as I already mentioned before, huge expansion before the opening. Yeah, right here, 261 handles. We are really in trending conditions. Therefore, we want to see that we trade back to the upper quadrant and from there and continue our trend to the upside. And it's really important that we take partials basically above the AM session liquidity right here. Why? Because if we are in trading conditions, that right here is already over our expansion. We can expect something like a retracement. So that's what I did wrong today, but I will go into this basically later on. And now we are trading higher once again. Yeah, bit difficult day. Why? Because we have such a huge opening range gap that sometimes we are also not even trading back to the upper quadrant and just continue our trend higher. But that's like what I call it only up days. Today it was not really the case because we were already retracing lower with the opening and also due to the fact that we had really yeah, the how you call it, the new open kill zone says liquidity right here in advance. What we wanted to see that we trade back to. Also right here we can take our price range from low to high, and when we measure basically the quadrants, we can also see that we trade back to the lower quadrant, and that basically completes also our market maker symbol because we at least want to see that we trade back to the lower quadrant. If we have a market maker sell model, if we have a market maker buy model, we want to see that we at least trade back to the upper quadrant. So opening right here, traded lower, stopped right here in advance of the new open kill zone says liquidity, traded higher. Failed out also to take out the highs right here. That would have been something I was basically looking at if we take out the highs right here and we're able then to form a market maker sell model, but that was not really the case. It was not really easy. I shorted right here, really bad fill I have to admit, and got stopped right here. To me that's a stop rate. I think my stop above the wick right here should be enough. Why? Because we have not only a displacement to the downside right here, but also to the upside. So that's a balanced price range. I do not really like that we close above the inversion fair gap right here and still then trade lower. So that was a mistake I made today. I also got long in here. I had my stop above the wick right here, went long. And that was definitely too rush today. Once again, yeah, still really how you call it, yeah, it's a challenge for me to be patient, I would say. But yeah, got stopped right here. Also went short, added right here as well, because I was really convinced that we are going to trade lower, squeeze the SSL liquidity now. Because if we just spend much time higher, it's likely that we are going to trade lower. That's also the case right here. If we spend much time retracing and we are unable to trade higher, the more time we spend basically in PDA raise, the more likely it gets that they will fail and that we will trade to the downside. So yeah, took two partials right here, one partial right here, and got stopped right here. So that's a really clean market maker sell model trade in that case. That's what I wanted to see. And from there on now, because we completed our market maker sell model, yeah, we are able to look for longs. I think every trade expect the long right here to me is completely valid. Also, the fact that I went long right here, so after 10 a.m. traded lower, to me that's enough of a wick, I would say. Also because the wick right here traded lower, traded below the 10 a.m. wick, and from there on traded higher. I think that's, I don't know, probably being, yeah, just more patient would be ideal, and I would really avoid so many losses in that case. But yeah, still I think the trade is completely valid. I like it actually. Still I got stopped right here, engineered SSL liquidity in that case because we only wicked below it, created S&T as well, and from then I know, okay, we are definitely going to trade higher, or I want to see that we trade higher because we are really trading at all-time highs with equal highs right here, also right here. Look up and kill zone buys the liquidity, so really only retrace lower. The damage to resets the liquidity already. To me now it's definitely the time to trade higher. Enter right here and was trading with 3 contracts and took only one partial right here, and that was a bit of a mistake. That's what I mentioned now before already. If we trade basically now our reaction of the CE level right here, so that's basically the two conditions we want to trade. One possibility is that we short back to the upper quadrant, and the other setup basically is that we trade off the reaction of the upper quadrant level. In that case, if we only trade back to the upper quadrant, C is also permissible in that case because we have such a aggressive opening range gap. It's more likely that we will only trade back to the upper quadrant, and we also do only want to see that we basically trade back to it, because trading even lower would be, yeah, not ideal, I would say. Then we would not be as bullish. Therefore, the long right here is really rushed, I have to admit. As I mentioned before, sometimes there are days, only up days as I described them, where we even fail to trade back to the upper quadrant level, where we only sweep basically regular, for example, pre-market liquidity, and from there and then trade higher. But in that case today it was definitely too rushed. Also really early on, 9:47, we can definitely be a bit more patient. Still, I really like the longs in here, as I now mentioned before. So therefore the long, yeah, I got stopped right here with the long, entered long right here, I think, and probably even added to my position. So I was trading 2, then added 1, took 1 off right here and got stopped with 2 contracts right here. Yeah, I think that's right. And that's what I definitely did wrong, because if we are trading really at, I don't know, high resistance conditions higher, because we are already overextended. What I mean by that is, if we look back at electronic trading hours, we can see that we, especially if we take a look on the daily chart, that we have already this huge body to the upside, 300 points. I mean, that's already, yeah, really overextended. Therefore, we do not really expect such a huge expansion above our AM session liquidity. Therefore, right here, wrong money management. I should have taken off 2 partials, not only 1. So more than 50% definitely of my position. Got stopped right here, but now back to the last trade I took, which is actually really high quality in my opinion. So we came down, we really failed to maintain our bullishness after sweeping the engineered SSL liquidity. Right here we only leave bodies in the upper quadrant. To me that's permissible. Still I would like to see some more speed, because we just spent too much time within the inversion fill gap right here. So I got stopped right here, I'm content with that. But then we traded back down, and now really importantly, if we take our range from the 10 a.m. opening price to the low, we basically can measure the quadrants right here, and we see we've really respected the the CE level, so we failed to place bodies below it, and with that we have also the inversion fill gap combined. So that's actually quite clean. I really liked it, and I knew that we would not leave such a triple top right here basically in place or untouched. Therefore, I went long with, I think, 3 contracts right here, or 2, no, sorry, 2 guys. I left my stop, I think, below CE right here, so down here something like that. Then also added even right here, a bit aggressive, yes, but I'm really sure that we will not even trade back into the gap right here. To me, that's a breakaway gap. I want you to see that we now really take up the speed also with our setup. So basically our market maker buy model is a 1030 market maker buy model. Therefore I want to be done with 11. Basically took a first pass right here just because we had such difficulties to trade higher. That's also due to the fact that we have a hourly rejection block right here. That's also that's what you can see right here. So the quadrants really traded back into it, so wicked only into it, and really had lots of difficulties to trade higher. Took one partial right here, second partial right here, and as I now mentioned before, closed my position right there. I think, as I now mentioned before, it's possible that we will trade even a bit higher with high resistance. We have also liquidity right here, which we now took out. But yeah, I think that's the whole move which I'm interested in, basically to buy down here and to target the triple top. Everything what we do higher from there is possible, but is not a must, I would say, because we are already overextended. But I think it's also still a possibility because we spend such much time in here, and we cannot spend basically or stay in consolidation forever. We either trade to the downside, and because we are at all-time highs, it's unlikely because we would have done it basically right here. So really failed to trade lower. And also the quadrant you can see right here is the quadrants of the hourly rejection block to the downside, which we want to see that we basically trade back to CE. So don't basically long if we did not trade back to CE. But that's what we did right here already with 10 AM opening price, I think. But it's not really as important. But I think that's basically it. So I hope you got the breakdown. Hope you enjoyed what I don't know what I talked about. I don't know what I'm even saying right here. But that's a trade breakdown. A small winning day. No, not even small. Is a winning day actually. And I'm actually quite content. I think it's a more difficult day because we have such high resistance. Would have been really in a more perfect conditions. We would not trade back even into the inversion fair gap right here, and would really dump just through it. But we are not in bearish conditions, so we cannot expect that. Also because we have done no damage to buy side liquidity, also no S&T being in play right here. So the short right here is not really ideal. Right here it was now obvious that we are going to trade lower. The long, once again, also not ideal because we did not trade back to the upper quadrant. Therefore I do, in that case you cannot not really look for longs or shorts, but in that case the short was more obvious that we are going to trade back to the new open kill zone, size liquidity, also the upper quadrant, and from there on we will try to just frame a market maker buy model. And we will expand on regular trading hours above AM session liquidity, and that's what we basically got. So I think I still have to be a bit more patient. Still, I really like today's money management. Partials were definitely not perfect, especially right here, as I now mentioned before, but I really like the trade right here. Also how I utilized or how I used the 10 AM opening price. I think I really like the setup right here. So with 1030, I think that's kind of a high quality market maker buy model in here. Also really V-shaped, have much more low resistance in here than on the left side, which now we are expanded higher. But that's it. Hope you enjoyed the breakdown, and see you soon. you.